Let's get right into it with NIO because they provided a March and first quarter 2021 delivery update, and the stock, like I said, won't stay in the mid 35 range. NIO is currently breaking through the $40 per share mark, and I think this could just be the beginning. This current delivery update I need to discuss is game-changing and provides a lot of clarity into what to expect with the stock in 2021. I'm also going to discuss NIO's valuation currently and provide a forward valuation towards the end of the video, so stick around, you're gonna like this one. With that being said, if you do enjoy this video, make sure to hit the like button, subscribe with the bell notification. You guys already know that I like to buy low and sell high, and if you want to follow my stock trades and make money with my Patreon family, I have a link for you below. It's the best day to get started because it's the first of the month, so I'm gonna have a lot of information coming for you guys, and I think this is gonna be a killer month. The reason NIO was dipping in the stock market and touched mid-30s range is because at the end of March, NIO had suspended production for 5 days due to the chip shortage and revised Q1 delivery guidance lower. However, NIO posted another monthly and quarterly delivery record as March deliveries came in at 7,257 units, with Q1 beating guidance at 20,060 units. This represents an increase of 423% year over year and 15.6% quarter over quarter. It's clear to me this company is still in the early stages and seeing massive demand from the Chinese consumer for its vehicles. I'm staying bullish on NIO, and I told my Patreon that this was a huge opportunity to sell puts on the 35 strike. If you don't already know of this strategy, you have to watch this video that I have for you pinned in the right corner right here. And also check out my option playlist. NIO has some of the most attractive options, and it's made it even easier to invest in. I'm very bullish on Q2 and even more so on the second half of 2021 for NIO. For quarter two, monthly production run rate is expected to fall 25% from its peak to 7,500 units, dampening sequential growth from Q1's 20,060 units to just 22,500 units. Again, I want to emphasize this may be a tough quarter for them due to multiple constraints, but they're still expecting to come out with a growing quarter. But here is the great news about the stock. Constraints are forecasted to ease through second half of 2021, which should allow capacity to rise 9,000 to 10,000 units. Second half deliveries could rise significantly to 48 to 55,000 units on top of strong exhibited seasonality. While Q1 deliveries did not necessarily witness the impact of the chip shortage during March, Q2 will likely face somewhat more of an impact to production and deliveries. However, this should, and in my belief, is just going to be another normal speed bump with normal production and deliveries possible again by Q3. Back on Q4's 2020 earnings call, NIO management announced that the company has sufficient chip supply to support normal production levels. NIO expects to source enough chips from a main supplier to hit targeted production volumes in the second half of 2021. This will happen while the effects of the chip shortage are still in play. Other battery supply constraints should resolve by July, another factor impacting the production cap for Q2. I'm very confident if we check NIO by the end of 2021, this stock will be higher than it's trading at today. My conservative price target for this year is moving up slightly to $80 per share, but I've got to give you guys more color on what I think can happen in 2022. NIO remains on track to enter the European market later in 2021, and what makes me so bullish on NIO long term is that they're playing in the biggest EV market of the future, which is China, but they're also expanding into Europe. Researching potential avenues and strategies for a US and North American market entry has also begun as well, although NIO has not set anything in stone just yet. International expansion efforts will be in the premium price segment, as NIO is not aiming to enter the mass market segment directly. Rather, it aims to use joint ventures to gain exposure to that segment. NIO's management strikes me as very competent, especially compared to all of the other EV companies out there aside from Tesla. For fiscal year 2022, production capacity expansion can support up to 300,000 units. And if impact from supply-side battery/chip shortages do not necessarily affect NIO as hard as the market thinks, then NIO deliveries could rise easily to 155 to 200,000 units, generating revenues of between $9 and $10 billion. At huge volumes above 150,000 units, NIO should find some stability with gross vehicle margins around 15 to 18%. That's not as high as Tesla, but again, NIO is ramping up and is the Tesla child of China. They're supported by the Chinese government and have advantages in the local area no other company has. I've said this before, but before I get into valuation, I will say this again. Battery swapping is a true differentiator for NIO and is a key advantage. The reason battery swapping technology has so much power in a country like China is because literally everyone lives in a giant skyscraper, condo, or an apartment. A very small percentage have access to charging stations in their own homes. Battery swapping technology solves this exact issue. It makes a lot more sense to battery swap than EV charge to the Chinese consumer. This also creates a large and consistent cash flow that comes in monthly for NIO. Now let's discuss the valuation and see where it's currently at and my projections. Price to sales wise, we're sitting at just under 20. Considering NIO started the year at a 30 price to sales ratio, we have a 33% discount off the price investors were willing to pay in the beginning of January. NIO entered March trading at about 13.1 times projected fiscal year 21 revenues and 7.2 times projected fiscal 22 year revenues. After EV stocks have sold off and valuations have been crunched a bit, entering April, NIO trades at 11.7 times revised fiscal year 2021 revenues and 6.4 times projected fiscal year 22 revenues. NIO is becoming very attractive at these levels, and because fiscal year 21 revenues are projected to be much higher, the valuation makes a lot of sense to me. Tesla's China segment trades at 9.5 times projected fiscal year 21 earnings and 6.6 times projected fiscal year 22 revenues. The revenues in 2022 are expected to be $15 billion for China, so NIO is just slightly a better bang for your buck for fiscal year 2022 estimates. The two trade at relatively similar long-term valuations, with both aiming to scale deliveries significantly over the coming years. I'm very heavily invested in Tesla. I was thinking of doing a Tesla Holdings reveal, so if that would be interesting to you guys, just make sure to hit the like button for me so I know to make that video. Are there some risks to NIO? Sure. I mean, every single growing company has some risks. From one perspective, it's also a Chinese company, which makes me a little bit more nervous than a US-based company. However, the flip side is that I love China as a growth story, and with support from the Chinese government, NIO is virtually guaranteed to succeed. My long-term price target for NIO is still $250, and I think it can even beat that in the future if the EV story plays out how I expect it to. With options, you can make a lot of money on NIO and generate significant wealth if you have a strong understanding. My goal and mission in life has been to educate as many people as possible about creating income and gaining financial independence, because I struggled with poverty growing up, and I'd love to share my knowledge and have more students make passive online income selling options like the way I've taught so many of my students to do so. Give my weekly option income course a chance. What you will learn will change the way you invest. It's guaranteed. I have so many happy students, and I want you to be one of them. For a limited time, it's 50% off with code 100K. And if you really need to email me, you can just email me here on screen. If you have any questions after reviewing and reading the website, I'll be happy to help you and answer any additional questions you have. Stay aggressive in learning, my friends, but be safe in investing. I can't wait to see you in the next one.